right, well, it is 12:02. Let's take full advantage of the time that we have here today together. So thank you folks for taking time out of your Tuesday morning to join us. I'm Zoe Zirup. I am the program coordinator with the Great Lakes Business Network, and we are a network of 240 plus businesses in the Great Lakes region. So that includes any of the 8 states that touch the Great Lakes. We were founded in 2017 to protect the Great Lakes and use our voices for good. So we have 3 key issues that we work on. That is advancing clean energy in the Great Lakes region, protecting the Great Lakes from issues like invasive species, microplastics, PFAS, and then our third issue and founding issue was the Line 5 pipeline. So we work with businesses in the region to do advocacy and education. It looks like webinars like today. It can look like sign-on letters. It can look like taking businesses to DC to meet with their representatives. So we really run the full span of opportunities for folks to get engaged and speak to their representatives on the issues that impact them and their ability to operate in the Great Lakes region. So today we have a really great group of folks who are going to educate you all on what's happening in the clean energy space. And I apologize for advancing the slides here a little slower. But of course, there's a lot happening in the clean energy space that we need to update you all on. With the new administration, we have certainly seen an attack on the clean energy economy. And we had so many great advancements that happened under the Inflation Reduction Act that are being rolled back. Not just the clean energy economy, but also
Computer
attacks.
not working. Do you mind come look at this for a second?
Sorry about that. Just going to mute Mary real quick there. And then we know that the EPA is also under attack. So our air, our water, our health, our community's health. There's a lot at stake here, and we want to provide all the opportunities that we can to protect what benefits we had from the Inflation Reduction Act and ensure that folks know there are still continuing opportunities to invest in clean energy. So we know that clean energy is really, really good for lowering our energy bills, building more resilient energy grids, and creating energy independence. And we saw the attack happen primarily through the Big Beautiful Bill, as it was called, where there were many rollbacks on the tax incentives and a lot of clean energy projects came to a halt. Um, the phase out of those tax credits was really why that through the Inflation Reduction Act that there was such a boost. So we want to, find opportunities and partnerships in the region for our businesses to continue on their clean energy journey if they wish. We know that uh, engaging in the clean energy space for your business or for your home helps reduce energy prices. I think it's expected that over the next 5 years, energy bills for families could go up $400 per year. So we really want to help our businesses cut their bottom line where they can. So that could be solar, that could be geothermal, that could be energy efficiency upgrades that ultimately reduce operating costs over the long term. So I will do a quick round robin of introductions here with our attendee or our panelist, and I will have Christian introduce yourself first.
Hey everyone, Christian Grossbeck, technical sales with Harvest Solar. So we're a Michigan-based solar installer, design build for commercial projects.
Great. Take it away, Todd.
Hi, I'm Tad O'Grady. I'm the VP of Partnerships at Michigan Saves. I've been with them about 14 years, and we are a nonprofit green bank servicing the state of Michigan.
Wonderful. Mary, are you able to quickly introduce yourself? Oh, let me unmute you.
This is Mary Freeman, Lean and Green, Michigan. We administer a statewide property assessed clean energy program.
Thank you. All right, we are gonna first dive into it with Christian, and I'll let you take it away from here. Tell me when to move slides.
Yeah, you can move forward.
Oh,
Oh,
I am so sorry. I stopped sharing. That was unintentional. One moment, please. All righty. There we are.
thanks. Yeah, so I'm with Harvest Solar. We are a solar installer based here in Michigan. We Operate throughout the Midwest though, so we have a small office in Illinois and can build in, Ohio, Indiana, any of the different states around the Midwest. So what we do is design and build systems on site for commercial use. So a lot of big agriculture, industrial manufacturing, small business, all that type of stuff. We do everything in-house. So we have the construction crews, electricians, project managers, our team to help you through the process to look at the different incentives, financial review, make sure everything works out for the project. So full turnkey, everything that we do. You can move to the next slide. So really wanted to touch on what has changed. Oh, looks like the formatting got a little muddled bringing it over. That's fine, we can move along. So really the biggest changes since the OBB passed this summer, um, high level from a solar side, it's really just kind of tightened the timeline and requirements for the incentives. Really when you're looking at a solar project, there's three ways that it pays for itself, that you're getting a return on it. There's your bill savings. We had that before, we still have that. So it's not like solar's going away. We still have, a cheaper form of electricity in a lot of the cases, depending on your utility. The two other ways are the tax credit and the depreciation value. So really what changed here was that I guess on the tax credit, there's two different tax credits. It looks the same because both of them are 30% of the project cost, but the residential tax credit was under Section 25D and the commercial was under 48E. So the way it's being phased out is that the residential tax credit now, after the reconciliation bill this summer, that ends end of this year. So if you don't have a system installed and commissioned by the end of the year, then you would not be eligible for the tax credit. Really, at this point in the year, most installers are booked up through the end of the year. So unfortunately, the residential side is not going to be really getting a tax credit moving forward at this point. On the commercial side, though, there is a longer runway for it. Previously, it went until 2032. Now it's being pulled back, and you have until the end of 2027 to complete and commission a commercial solar project. There's a few different ways that you can be eligible for it and safe harbor it. I'll touch on that a little bit more, but just a high level, before it was 30% tax credit. Now residential ends end of this year, commercial ends end of 2027. One thing that was actually, oh, One thing that was actually a bit of a bonus that helped us with the solar and renewable industry with the OBB was that for depreciation, that had some bonus depreciation, but had been sunsetting. Now they have brought back 100% bonus depreciation. What that means is that the cost basis, the eligible amount of your project, you can now depreciate 100% of that asset in the first year. So between the tax credit and the bonus depreciation, you're actually, if you have the liability and your tax situation is right, you can recoup, two-thirds of your project costs within the first tax cycle. So short term until 2027, we've actually seen a little bit of a benefit on the financial side. And then we're going to see after the tax credit goes away, that your costs are going to go up a little bit. At the same time, we still see electricity rates from utilities rising about 5 or 6% a year. Cost of solar installations are coming down. In a couple of years, I think we're going to be in a fine situation. The tax credits were something that made it definitely more approachable, but it's definitely by no means an end all be all, and there's still going to be plenty of opportunity within solar in the future. You can go forward, Zoe. So I mentioned there's kind of two ways to qualify for the commercial tax credit. There is an opportunity to safe harbor the tax credit. This means that within a year of the bill signing, so July 5th of 2026, you can either incur 5% of the project cost or begin physical work on site, and that allows you to lock in the tax credit. So you don't have to have it completed by the end of 2027 then. You have, I believe it's 4 years to use it at that point. So if you're getting started and want to say, yeah, hey, I've got a new development, I might not have everything done by 2027, you can still kick off a project and get it started. This is for projects that are less than 1.5 megawatts AC. To put that in perspective for people, that's going to be, several thousand panels. If it's ground mount, several acre size, 5, 10 acre size. So these are big projects still. That's going to be more, if you're above that, you're getting into utility scale. For a business, this basically is how you could safe harbor it. The other option is just to get the project completed before the end of 2027. Most commercial projects, depending on the utility and zoning and all that, take between 9 and 18 months. So that does leave a little bit of a window now in the next, 6 to 9 months to get projects, going, moving along so that you have time to build it and have it finished before the end of 2027. Next slide. Additionally, I'll leave a lot of this for Q&A, so if you have something that you have a comment on, we can discuss it there. But there's a lot of little nuances that go along with the bill changes around. There's bonus adders for the tax credit; those are all still available. There's new FIAC requirements, which is for an entity of concern. There's new requirements starting next year. There's no guidance on it yet, so it's hard to say how much we're going to be impacted on that. Transferability, meaning selling the tax credit or the direct pay for nonprofit, that still all exists, so that's still there, which is great. There used to be a handful of grant programs we've seen, regardless of the bill signing, but just with this administration, most of those have been, defunded and are essentially gone at this point. We do work quite a bit down in Illinois. There is a state-funded program, Illinois Shines, for their SRECs. That is state-funded. That had no impact from the federal bill, so that still exists and is still going strong. So I'm sure there's a handful of other things people might have questions on, but I'll leave it to the end for Q&A. Overall, it's hard seeing the tax credit go away a little bit sooner, but I think there's still a great opportunity and still great short-term incentives with solar, as well as a long-term runway for the industry. I'll hand it back over, Zoe.
Yeah, thank you, Christian. I appreciate that. And if folks have questions, we'll save them for the end. Please feel free to use the Q&A. I'll pass it over to Todd.
Okay, thanks, Zoe. So just for you folks to know, Christian at Harvest, Harvest is one of our top solar contractors here in the state of Michigan. So great organization to work with. We also work hand in hand with Lean and Green, Mary's organization. So if your financing needs don't necessarily apply with us, then we'll send you over to Lean and Green, and they do vice versa. So just wanted to make sure everyone knew that. Go ahead. So just I always like to have this out here that my advice is not necessarily accurate tax advice or legal advice. So please consult your local CPA or tax professional for additional guidance. Next. So Michigan Saves, we're a nonprofit. We've been around since 2009. We did our first loan in 2010. We started working off of a grant from DOE and the Michigan Public Service Commission, a $5 million grant. We've since leveraged that to over $700 million through public-private partnerships. That's all energy efficiency and renewable energy jobs that we've done that with. We work on a loan loss reserve model, so we get lenders on board, and if by chance a customer defaults, the lender knows they're going to be paid back a certain amount of that loan. So what that does for our customers is it lowers the interest rate and it lowers the underwriting requirements or the credit scores for folks to get loans. Luckily, through our history, we've had a very low default rate with these programs, so fingers are crossed. We have several programs. We have residential and commercial. Our residential side I'll go over briefly. All this information can be found at michigansaves.org. And my contact information is available too at the end of this presentation. So feel free to call me at any time if you have questions. So our home energy improvement loans start about 6.5%, terms up to 15 years. That's for anything that saves energy and renewable energy. You'll see in our commercial program, we have some programs that don't include renewables, but I'll point those out. These are all unsecured loans, the commercial and residential. So again, on the home energy loans, it's anything that saves energy. And we also have a septic loan program for septic replacements for residential, and we have a lead abatement program to have your home lead abated if it's built before 1978. Next. So all this again is found at our website, michigansaves.org. If you don't have a contractor like Harvest already, you go to our find a contractor search tool on our website, put in your zip code, the type of work you want done, and all the contracts that do that work in that area will pop up. There's a lot of good resources on that website, so please take advantage or call me and I'll walk through it with you. Next. So commercial tax credits and financing. Next, Zoe. So these are some good resources for a lot of the stuff that Christian just talked about. So I just like to have this up just in case you need to check some facts or look at some other numbers or whatever. These are excellent resources all about the tax credits and analysis of those. Next.
And I'll make sure to include those when we send out the recording as well.
Great, thanks. So our commercial financing, we have several programs. You'll see on there it says rates as low as 0%. That is for our interest rate buy-down program with the utilities, where this is strictly for energy efficiency, not renewable energy. But if you're doing an energy efficiency improvement on your business, house of worship, municipality, you can get 0% through DTE, Consumers Energy, and SEMCO. Most of our loans are between $5 and $2 million. Our standard rate without the interest rate buy-down program is about 7.5%, where we'll start on the commercial side. If you just need like to finance a septic or a solar project, the interest rate starts about 7.5%, and we can pretty easily do terms up to 84 months. We do have some lenders that will re-am after 60 months. So we have plenty of options. And again, as I said, if these options don't work for you, we'll send you over to Lean & Green. Next. Our tax credit bridge financing. That's kind of helps out what Christian briefly mentioned about the direct pay program. The direct pay program is where nonprofits and municipalities, schools they can't get tax incentives because they're municipalities. So they created this direct pay program where you can take advantage of the tax incentives, meaning you'll get a rebate from the feds. So if you start the project and you need that rebate money, we're here at Michigan Saves to supply that money for you, that rebate money up front for up to 24 months at about just under a 4% interest rate. So you can get that project going. And then when you get paid back by the feds, you pay us back. And so far, it's been a terrific program. We can do solar, batteries, geothermal. We can do loans up to $250,000, so that's pretty good as well. So if you have any questions on that program, please feel free to reach out to me, or you can also learn more at michigansaves.org /bridge financing as well. Next. So some of you may have heard about our climate fund. This is one of those programs that Christian mentioned is the funds have been frozen. So I'll just talk about it briefly in case we win a court case and it comes back. It's for loans from $500,000 to $10 million. Interest rate was going to be somewhere just north of 3%. It depends on the project and the term that you choose, but it's for everything that saves energy. It was just a great program. We were awarded $93 million and it's been frozen. We had over almost $300 million in projects ready to go for this program. So stay tuned. We'll put it in our newsletter if the funds get unfrozen, but until then, we're just waiting. Steps to access the tax credits and our other programs, obviously, they can all be found at michigansaves.org. The important thing is that you find a contractor, get a scope of work. We find out what the rebates are going to be and things like that. Contact your local utility. Otherwise, contact me at this number, 248-701-3058. That's my cell. Call or text me, and I can help you navigate the process or connect you with folks from the utilities or, as I said, Lean & Green or whomever it may be to get your project going. We have over 1,200 contractors in our contractor network. They're all been vetted. They all have the proper insurance and licensing to do the work, and they're in good standing with the state. So we also keep them informed and updated on the rebates that are offered around the state. Again, we are a statewide program, so we cover from Monroe all the way up to the Keweenaw. So there's, I think, over 58 utilities in the state. So we try and keep the local contractors with their local utility updated on the available rebates. And we can also do EV charging too. I didn't mention that earlier. Next. So Mary, I did it in 8 minutes. You
Well, and
have
real quick,
2 minutes.
Todd, can you speak to some of the other partners in the different states that we have in the area?
Sure, I'm sorry. Yeah, thanks, Zoe. So we work closely with the Indiana Green Bank and the Illinois Green Bank as well. So if you're located or have businesses or do work in that area, please feel free to reach out to me and I can connect you with those green banks as well.
Great. All right, Mary, we will have to have you unmute when you're ready and go ahead.
Morning, everyone. Thanks, Zoe, for having me, and thanks, Todd, for highlighting our connections. And it's great to be with Christian too. So go ahead to the first slide. So Lean Green, Michigan administers statewide property assessed clean energy. It's a uniform program, although each local government or county has to opt in according to state statute. So the reason there has to be an administrator is for that reason, to make sure that all over the state people are organizing and setting things up in the same way. So we connect commercial property owners, private lenders, and local contractors to bring capital into communities for energy efficiency. Definitely anything that reduces utility bills, so water conservation, uh, renewable energy, which includes, I'm glad Todd mentioned EV charging. A lot of the hotels have opted to add that, which is, it takes some wiring and stuff like that. EV charging, and then more recently, environmental hazards such as flood and drought, and also lead abatement, PFAS abatement, anything along those lines. So we see the project through from beginning to end. We make sure there's no cost to the local governments, and we make sure that the projects follow the state statute. Okay, next. So we have 61 municipalities. About 80% of Michiganders live in a Lean and Green Michigan PACE district. I was mentioning to the other presenters that I was out in Berry County yesterday, looking at some of the development that they're doing there to bring their very small downtown, but very active. So it's really fun to be able to go all over the state and see what people are planning. Next slide.
And one quick question there. So we have the counties highlighted on this map and
Yeah.
little green dots. What are those?
Oh, so about half of our 61 municipalities are counties, and the other half are cities, townships. It could also be a village, but we don't have any villages. So, like, if you see the 4 dots on Kent County opted not to join. They're sort of advocates of local control. So all 4 of the biggest cities in Kent County, Cascade Township, Kentwood, Wyoming, and Grand Rapids are all PACE districts.
Okay, thank you.
Mm-hmm. The eligible properties, the main thing is that it cannot be government owned. So, if you call with a municipal project, we will send you to Michigan Saves for their program. But other than that, nonprofits, multifamily housing has been super popular, as has senior living facilities, but could be agricultural, huge range of eligible properties. Next slide. They do have to be commercial. We do not have residential PACE in Michigan, so that's important to understand. So the benefits of PACE, it brings the private capital for these improvements, and so most commonly it will be one part of a capital stack, and it'll cover up to 25% of the total cost of the project. That the parts of the project, like the HVAC, the building envelope, if they're putting on solar panels, any of those things, the PACE funding will cover. It's fixed interest rate, but it is not subsidized. We are not a government program. It follows basically the regular market. So a lot of times in a big project, PACE will be the last dollar in. It'll be better than many construction loans, partly because it goes out for 25 years. So the payments are much more manageable for large projects. It's secure. People like to invest in PACE because there's a lien voluntarily placed against the property, which actually creates a special assessment, which acts like a tax. So although the borrower pays the lender directly, it doesn't go through the state government. It is registered in the title as a tax. And so that creates a very strong security for lenders. It improves the property. So usually there's a mortgage on the property, and the senior lenders are very happy with the PACE improvements because it makes their property more valuable. And, it keeps communities going with creating jobs for local workers. Next. Some of the eligible improvements, I mentioned some of them, but they're listed out here. In a senior living facility, putting in low flow toilet sinks and shower heads is huge. On the water side, there are 4 or 5 cities in Michigan that charge a runoff fee. And so people will pay, thousands of dollars a month because they have a lot of impermeable surface space. So if you put in a permeable parking lot or a green roof, it will reduce that utility bill and therefore be PACE eligible. All the renewable energy items are there. And then, of course, we've added environmental hazards more recently. We have had a farm that put in an anaerobic digester to process their animal waste, and they now get 97% of their energy from their anaerobic digester, paid for itself in a few years. Next. We already mentioned that. Next. So some of the things that PACE can be a part of with utility rebates, traditional bank financing, historic tax credits. A lot of our projects also have brownfield TIFs on them. Well, we've done several with USDA backed loans. We're eligible for HUD backed housing. The biggest inquiry we get for PACE projects is multifamily housing in communities where the workforce has to commute 2 hours because they can't afford to live in the town where they're working. Next. So some of the market data, we brought in $312 million in private investment, 88 projects. And you can see we've put together some statistics about things that have been saved and jobs created. Next. I'm just going to run through a few pictures. This is actually a rendering, but I'm pretty sure it's built now. I should get a new picture in there, actually. I just put in a few pictures of projects from around the country. So here's one. You can go to the next one. This is in Ottawa County, a church that financed their PACE. The Hazelwood Apartments, we went and toured them about a month ago because they just opened and they're leasing, and they're doing really well, actually. But they are beautiful, absolutely beautiful, super old, completely abandoned apartment buildings in Detroit that they were able to raise the money to bring them back to life and to bring that neighborhood back to life, honestly. This is a hotel that was vacant for 75 years in the downtown corner of Hillsdale where the college is, and they needed housing for people visiting for games and, parent weekends and stuff like that. So they were able to pull together historic tax credits and other things to bring this building. It's also really beautiful. And what it looked like before, it's kind of like the Michigan Central situation where the train station looked so horrible and now it looks so beautiful. It's like that. Next. The Flats of Acme Village is another one in Grand Traverse County. Grand Traverse County is one of our most active counties. And they've done, Wayne County is by far the most active. That's because their economic development program or department really promotes PACE. Whenever they give a grant, they say, if this isn't enough money, if you've tapped all your other resources, if you can't get more in your mortgage, we should look at PACE. This is our partner training. We do have videos on our website. There's 8 of them. They're super short and they address each aspect of the PACE program. So feel free to log on to our resources tab and check out a few of those. We have contractor training. Also, one of those videos is contractor training, so you can check that out. Next. And that's it. I think I did 8 minutes. I put my timer on. Did I do it?
No, wonderful. Thank you.
Okay, yeah, that's my contact information. Feel free to reach out. Feel free to go to our website. And thanks for the opportunity to present.
Thank you. And if folks want contact information, it's here. Feel free to screenshot it. We will send out contact information with the recording after the webinar as well. So I won't stay on the screen the whole time, and I'll stop sharing so we can see everybody's faces. And if folks have any questions, please feel free to drop them in the Q&A. I'm not seeing any at the moment, so we'll just give folks a minute in case they have them. And Mary, can you speak to other states? So of course, you're lean in Green Michigan. What is available, perhaps, let's say in Wisconsin or Illinois of a similar model?
Yeah, there's 35 states with active property assessed clean energy programs, including Illinois. Wisconsin is one of the absolute best in the country. They've cracked the nut of figuring out how to get local banks to be PACE lenders instead of relying on national lenders. And we've had them come in and do webinars for us to work with our Michigan banks to become PACE lenders because they have more interest in smaller projects. So yeah, has had a program for longer than we have. We're one of the oldest programs in the country, and we're the eighth most, well, I guess you could say most successful. Um, but yeah, most of the states, Pennsylvania, Connecticut, most of the states, red and blue states, are PACE districts.
Okay. And I was just doing a quick Google search to find some of those links. It looks like Ohio has a couple options.
Yeah, some states have, you know, five PACE administrators. And that was one of our goals was to, excuse me, was to avoid that because it makes it difficult for lenders coming in when there's five different programs that they have to figure out how to underwrite for. So we tried to make, I mean, it's an open market, so someone could, if they were crazy enough to try to start a PACE program, because it's a lot of work and it takes a long time for it to get into place. But if they wanted to, they could. But you know, we've been trying to make sure that it's a uniform program.
Sure. All right. Well, I'm not seeing any questions come in through the chat, which is okay. Maybe folks,
Can I ask a question?
yeah, please
I
do.
actually, my our commercial installers also booked through the July 5th target of next year. That's for Christian.
Yeah, I mean, I would definitely say there's been a lot more traction with commercial projects after July of this year, after the bill was signed. Are we booked up through end of 27? No. Are people starting to have discussions around budgeting and planning for 2026 budgets about safe harboring? Yes. We're actually having a webinar, I believe, this Friday to talk about how commercial businesses can do a safe harbor program with Harvest Solar.
And then for Michigan Saves, again, and this is about the deadlines. Do you have a sense of whether or not the Christian said all contractors are booked up for residential, and is that what you've seen too?
Yeah, it seems like there was a big rush for people to get in before the deadline. So a lot, even commercial contractors focused on residential to get to this deadline, and
I
now
see.
they're going to go back to commercial. But um, for the solar contractors, they've been fairly busy.
I bet. Can I ask one more, Zoe?
Please do. And Christian, if you have a link to that webinar that's coming up, we'd love to have that.
Hmm.
I was really interested in what you said, Todd, about the program with where you can cover the direct pay for nonprofits because they don't actually pay taxes, but they get the rebate. They can get the rebate.
Mhm.
Is there any fear that that rebate's going to disappear?
There is, yes, but I think we have until that one seemed fairly protected, that
Oh,
direct pay tax credit. So we're pretty confident with it. And we were using our own funds to fund that program. So I know we still have funding left for that. So it's just we just keeps rolling. So I'm going to be promoting it all next week at the Michigan Municipal League. So we're pretty confident it's going to be around.
so if you put all the money out, but then it goes away, you'll be okay still?
Yeah. Yeah, for
That's
sure.
good.
Yep.
Okay.
All right. And we do have one question in the chat for Christian. They're saying, I've heard that the price for solar has increased with the demand to get a contractor, perhaps more than the value of the tax credits. Is that true?
Um, I can't speak for that on the residential side. I have heard a little bit on the residential side that customers that, might have been fighting for the bottom because they were in such high demand the last couple months, prices might have gone up on the residential side in the short term. But the residential guys I've talked to that are going into next year see that coming back to normal, and if anything, them offering more of a discount in order to make up for the lack of a tax credit. So I think that might have just been a bottleneck for the last, couple months, getting the residential in. From the commercial side, we haven't seen Harvest specifically haven't had any price changes upwards because of anything going on. Um, Supply chain is a little bit, we'll see what comes in with those FIAC rules for 2026. But at the same time, we don't see any major cost changes in the near term.
All right, well, we have no other questions in the chat at the moment, so I want to thank all of our panelists for sharing their knowledge and wisdom with us, providing some opportunities for continuing to invest in solar and energy efficiency and EVs. It's not all doom and gloom. We certainly have, as we see here, creative folks thinking outside the box who have our back and want to help us and help our businesses and our communities thrive and save money. So please reach out to these folks. We have one other question in the chat that just came in, and it said, will we have access to the PowerPoint? Yes, I will make sure to get that out with the recording. So that will go out in an email as well. So if there's not any other final comments from folks, thank you so much. And we will be following up shortly.
Thank you, Zoe. Thanks,
Thanks,
everyone.
Yeah, thanks, Zoe. Take care, everyone.